Right, this video is going to be called, quite simply, What Traders Screw Up. All traders make mistakes, and again, we kind of talked about this in our 7 steps to being a successful trader, that if you believe in perfection, perfection will end up killing you, or the lack of perfection will end up killing you in this game. It basically comes down to controlling your emotions between your ears, and that 6 inches is the most important every day when you step into this ring and into this game of trading. So what does force traders to repeat and come to positions that lead them to make mistakes and mess up? I've got a list of things here that I'm going to run through real quickly and give you an idea of what we're talking about. First off is forcing trades. There are a lot of reasons people force trades, and you really need to get to the bottom of it. Is it due to impatience, or is there another motivation? We all get what we want out of markets, and is it the fact that you want to be active, be compulsive, obsessive, and be in a trade all the time? If that's the case, trading is probably not the right profession for you, because if you're trading well and you're trading consistently, taking the right setups that your strategy lays out for you, you're being patient and you're sitting most of the time. So make sure you're not forcing trades is item number 1. The second is lack of research or understanding about a trade. Why are you taking a trade? Do you have a plan? When you're going to enter, when you will exit, both from a stop perspective and a profit perspective. A lot of people can get into a trade and see the setup, and they may even have a stop in place, but they may move their stops on the profit side too quickly. So again, lack of research and understanding is another big reason why traders repeat the same patterns, the negative patterns, over and over again. Trading without a strategy is the next item on the list of why and what causes traders to screw up and make mistakes. So trading without a strategy, without a plan, without a journal, without keeping track of the reasons why you are looking for opportunities and trades, times of day, is really a next one that's really important that I want to bring up. We talk about market profile. Fundamentals and technical types of trading work for a lot of people. I go on to say that time is the most important element when it comes to trading. The wrong trade at the wrong time might have worked at a different time, and a lot of people can't take a trade, step out, and then get back into the same trade. So timing on the trade can be kind of tricky for people, and you need to be able to, again, be comfortable in what times of day work best for you as a person. Maybe that's the morning. Maybe that's the lunchtime session. I prefer morning sessions and closing sessions on most real-time hours when it comes to the markets. You may prefer trading the after hours and during the lunch hours when I don't want to trade, but each person has to figure out which time frame works best for them. That horizon in that time frame, how does it look out there? How long do you want to be in the trade? How do you is it a day trade? Is it a swing trade? You don't want to waver your tendencies from a swing trade to a day trade, or a day trade to a swing trade. Set your time horizon and stick with it. Seasonality, again, is there a discount or a premium associated with the timing of the seasonality? This time of year, for example, the end of the summer, August, can be slow months. The December month following Thanksgiving can be slow months. Those types of seasonality need to be factored into your timing. Earnings, how does that factor into where you are? FOMC, these types of issues are all timing things. Portfolio management, again, a retail store stays open by continuously ringing the register. Some people need to ring it more than others. Others can trade less and truly profit in bigger steps just by waiting for the really nice setup. And then the other side of that is waiting for the perfect circumstances, which are rare, if ever, in the trading world. So don't wait for the perfect opportunities necessarily all the time, but also you can't swing too far to the other side and overtrade. What is the range in your timing? In other words, if I get into a trade, am I thinking I'm going to be in this for no longer than 30 minutes, 2 hours, 2 days? You need to define that range kind of when you get into it. So you have timing can be an aspect that comes to exiting the position. In other words, price may not factor into the end decision sometimes, and we talk about this all the time with market profile. If I expect something to happen, price to move up, move down, or stay the same, and it doesn't happen over time, I will exit the trade, whether I'm right or wrong, if that time and that range is not in sync. And then the biorhythms. Every instrument, whether you're trading stocks, futures, options, currencies, all have their own life, if you will, the inhale and the exhale. And so you need to get to know what biorhythms are at work and in play for each instrument when you get into looking at the markets. Now the next item after timing, and timing is, by the way, probably my most important item on that list. The next item following timing is, again, taking a trade, throwing good money after bad, not accepting sunk costs, which are losing trades. That is a sunk cost in the trading business. You are going to have losers. I contend that you could trade like Talib and actually hit 10% of your trades being right, but make all of your money with those 10%. He does that via option strategies. So there's a lot of ways. You don't have to be even 60% right to make money at this game, but you have to very clearly define what the risk is. Risk first, and again, not throwing good money after bad. So don't chase a trade just because you lost a trade. There will be the next setup, and you have to be patient and wait for it. Not hedging. Are you in a position where you're spreading? Spreading is another way where you really don't care about the direction. You're just either looking for a movement or non-movement. These are other ways that traders need to look at markets beyond just directional trades. You can look at hedging opportunities that during certain times, markets can provide better opportunities than others directionally, and then other times markets provide more opportunities on the arbitrage or the hedging type opportunities. Are the costs too high is the next issue for the reward. In other words, is it insufficient risk premium or sufficient risk premium when you're looking at what makes traders set up? Is it a high reward, low risk trade? That's really what you're looking for. Again, I'd like to talk about the book Anti-Fragile that Talib wrote recently in the late 2012 time frame. Read that book. Understand that you need to be patient and wait for the things that you know are going to move. Who knows why they're going to move, but you know they're going to move, and take advantage of that change and the dynamicness. That is what makes traders successful. Buying and selling for the wrong reasons. Again, what are your reasons? Are you trying to get even with the market? Did your spouse or your son get upset with you before you left the house today? Maybe those are reasons not to trade. Did you have a sickness or an illness or a death in the family? Stay away from the markets. Very good news sometimes can have the exact same effect. So understand your biorhythms along with the market biorhythms, and you don't need to be in the game all the time to play. Again, small, medium, large cap trading differences need to be defined. Your liquidity, all these issues need to be thought about before you step into the ring and play the game of trading. So these are the major areas that you really need to consider when you get into the game of trading, and are also the factors that can drive traders to screw up repeatedly, and again, rinse, repeat, and do that same cycle of bad behavior. So think about getting a mentor. That's why we're talking about these subjects. It's not all technicals. It's not all market profile, timing, biorhythms. These things need to be thought through when you get into the trading business. All right, until next time, check us out at www.misstrade.info, and we'll see you on the other side.